Atul Suri joins us after a while to talk about market technicals, because that's what's on the market's mind, Atul, right now. What's happening with the indices?
Everything is great.
Everything is great.
Definitely,
really?
definitely. It just
with
depends.
the mid-caps too?
Exactly. It depends in which space you are. If you look at the Nifty itself, I mean, I think it's fantastically placed. We've had a correction in the markets, and for the Nifty per se, it's been pretty sideways. We are what, less than 4% from lifetime highs, and the feel or the mood is like we are down 20% or we are in a big bear market. So the issue is where you are in this space. And you know, as I say that when the markets are going up, people want mid-cap returns, but when the markets come down, you want to have drawdowns like large caps. You can't have best of both the worlds, right? So the fact is that you've made money in mid-caps. When mid-caps correct, that's the nature of it. That is why the pain people are feeling is there. And people are just rushing senselessly into any mid-cap or small-cap stock based on any tweet or WhatsApp and things like that. So I think that they're just paying the price for that.
But even on the index level, you know, I think the thought process is, even if we make it to the all-time highs, this is as good as it can get.
Who knows? I don't think so. It's just the sentiment.
Yeah,
See, it's just the sentiment, right? I mean, you look at the market, because the mood is bad, you just pick out those threads that are weak. Okay, we had issues with crude. It's down 5. I'm not saying it's the top is in place. It can go higher later, but $5 off. Bond yields sub 3. We've had a monsoon that's coming right through. So where are the big negatives? I mean, certain corporate numbers have been good. Global markets are strong. People are just focusing on, you know what, what's going to happen to Modi in 2019? I think even Modi doesn't know what's going to happen in 2019. So, I mean, who are we to sit? So, the fact is that that's the sentiment, that's the mood. And I think that's the best setup for, I feel, a bull market. Because the mood is bad, leverage has been squeezed out. You know, thanks to SEBI's directives, which were technical in nature, you'll find that leverage is squeezed out. So all are one side of the trade. Leverage is out, the sentiment is bad. And if you look at the charts objectively at the market per se, things are not so bad at the index level. Globally, there are a lot of good looking charts out there. So I really think that, you know, the market will surprise on the upside.
I guess 2017 spoiled it all for us, right? When you had 40-50% returns on mid-caps, you were like, what happened? But tell me, is this isolation going to remain? I completely take your point that we're only 3% away from the all-time high on the index. And index is all sitting pretty, but that's only 15-20 names which are leading and holding the index where it is, right? It's not like a 50 stock move that you're seeing even on the index.
That's true, Aisha, but what you've got to remember that you've got to see it in terms of excesses. You see, in October, November, December, when I used to meet clients, people are saying, yeah, why don't you have more mid-caps in your portfolio? Why don't you launch a mid-cap fund? So all people were doing was the love with the name mid and small cap. They do not understand that every stock, every strategy has its positives and negatives, you know. You just cannot, as I said earlier, you just cannot be in mid-caps and expect to have a mild. That is the nature of mid-caps. People are just focusing on return and not on strategy. Ultimately, you have to focus on strategy. And no strategy is green always. There are good days and bad days. The important part is over a long period of time where you can make money, and that depends on the suitability, your own nature. You know, everyone, who doesn't want a 40-50% return? I mean, everybody wants it, but can you handle a 20% drawdown? The answer is 9 out of 10 cannot. And then they will blame some fund manager, they will blame the regulator, they'll blame everybody else. At the end of the day, the investor has them to know themselves and invest accordingly.
So let's talk about your strategies, Asha, sorry to come in there. At the index level, what's the target that you, because you're saying that this is another phase of a bull market in the works?
I think so. I feel that, you know,
what's the target on the Nifty?
No, as I said that I have a long-term target of 3 years of 17,000, which I've been reiterating, and I think we're in a bull market. What I feel is that the current move, you know, the resistance is around 10,900, which I think will get taken out, and I feel we will move to lifetime highs in the short to medium term. And as I said, my biggest reason for being positive is the sentiment on the street. The sentiment is bearish, leverage is out, and globally things are not really as bad as it is. And everyone is just picking up on, like I meet clients, they said, हाँ वो सब ठीक है, but Modi 2019 में आएगा. That statement keeps coming to me, and I keep laughing within and chuckling that at the end of the day, you know, when the guy himself doesn't know, who are we to decide? And these are all hypothetical things, situations. It's your mind that is at play. But if you look and take away your emotion, you look at the markets, it's not bad. Leaders, performers, its quality is performing, and that's the biggest positive for the market.
Atul, this optimism is also getting reflected in your view in crude.
Right.
You know, last time mentioned that you're anticipating crude oil prices to move towards $90 per
That's
barrel.
right. That's right.
There has been some correction, as you
Yes.
rightly pointed out. Is your comfort of, you know, crude also moving high and markets also going high is because of the historical correlations?
Yes.
And
yes.
how are you seeing the pace in the movement of crude? We understand if it's smooth, then it's fine, but this volatility?
I totally agree with you. You know, we as a nation, yes, it may be counter that, you know, when crude goes up, it's not for India. But our markets have done differently. Just look at the chart of last week of copper. Copper is another very big underlying commodity, and it very often reflects underlying economic activity. Look at copper. In fact, the most spectacular chart of last week is copper. Globally, I'm talking about. So when you know, I've seen whether it's bond yields or crude, when it first hits a level, the markets gets taken by surprise. Right? But when the second time it hits that level, the market doesn't get surprised. Like bond, even US 10-year at 300 bips. The first time the market went, oh, what will happen when it will touch 3%? But the fact is that now it crossed 3% and and nothing much really happened. Same as with crude. I feel that crude will correct in the short-term corrective move. It will move higher. I don't think the top of 80 is in place. But the important part is not the event. It is the preparedness of the market. When the market is prepared for an event, it never really creates a big problem. The issue happens that when the market is not prepared for it. So I feel whether it's crude or bond yields, which may be negative, we think for our markets, but they will get higher. But yet I feel that that kind of impact, because the world is getting used to it, the world is getting prepared for it, and that's getting built into your prices.
Can we have same sort of reading for dollar index as well? Because we were listening to a lot of global experts, and they were saying as long as it is at 94, 95, that's fine. But if it moves beyond 95, then we are talking about currency risk and other things to, you know, pan out. Do you share the same opinion, or you have same stronger correlations with dollar index also moving higher and nothing would happen to market?
No, I feel 95 is a very important level for the DXY. Beyond 95, yes, I think it will create problems. But in the short run, I think it is a little corrective in nature. I feel it can all the way come down to 91. And then I think we should take one step at a time. But as I said, you know, that about a month ago, the dark clouds were very much there, whether it was crude, whether it was currency, whether it was our own political issues and other things. I think that in the short term, those things have abated, and this will create a perfect platform for our market to actually, you know, spurt out of this. And as I said, money will be ultimately made in quality. Money is not going to be made like how it was across the board. In fact, the poorer performing stocks do very well in those run out phases, and quality very often suffers. So quality has actually not had it so good in the last 2 years, but I feel it's a time for quality to emerge. I see some very, very big trends out there, trends in consumption, trends in IT, and there are many such spaces, and I feel that that will be a great opportunity for trend followers like me to ride this current move.
So you believe large caps will continue to hold good while mid caps will underperform?
Aisha, I would rather term it as quality and poor quality.
Okay.
So even in large caps, not everything is going to do well. The question is that wherever there are numbers, wherever there is quality, the market is going to reward it. And that's the right way of, you know, going about it. When everything moves, you know that it's going to end a little badly. And we've seen that. As I said, I'm not surprised it has happened. And I don't think a lot of those stocks will ever come back to this level. So, you know, people get pegged. That if I bought a stock at 100, oh, it's come down 20%, jab tak 100 nahi aayega, main bechunga nahi. And then you'll just find it drifting from 80 to 70 to 60, and then you're cribbing and complaining, arey, the market's made a new high, but my portfolio is not. The fact is that if you are in quality, you will find that that will actually recover, that will participate in the market, and I feel the market is getting into that kind of phase. It will be selective, it will be qualitative, but I feel it will be pretty solid.
So which are those three quality stocks that look good in the charts? I mean, not getting into buy or sell, but just talking about the trending line on the charts.
So obviously I cannot talk about stocks really, but I think that two spaces that really stand out for me is consumption, which FMCG is definitely an element of. I feel mid-cap IT is very interesting, and financials. I mean, whether you like it or not, you see what stocks have started making new highs. You'll find that it includes some quality financials, some quality private banks. So when markets correct, the first stocks to break out are leaders, and these are the leaders of the next bull market. And you just have to look at your screen and see that what is making new highs, though the market has not made new highs. And that's where, you know, the leadership is.
Atul, last time you mentioned that, you know, banks would be Achilles heels for this market if they don't recover. And in last interaction and this interaction, we have seen banks shown decent amount of recovery.
That's right.
You think the concerns of banking sector are more or less behind us, at least on the charts? Are charts showing that to you?
So, Siddharth, for me, the bank Nifty has two charts. One is a private and public sector. So from that point of view, if you look at the private sector bank Nifty or something, if you have that in the NSE index, you'll find that those are very different looking charts. Yes, PSUs may be great value and someone may like to bottom fish, but then that's good luck to them. And they have been doing it for years. So again, as I said, good luck to them. That's not my style. I'm a trend follower. I like to buy quality, I like to buy strength because I feel that the market rewards them disproportionately, and the beauty is that they happen with low gestation period and less volatility. So that is exactly what I am. So I really strongly continue to feel very, very positive about private sector banks, about some quality NBFCs, irrespective of, valuations and things like that. But the fact is that the screen is doing something else, and being a trend follower, I'm very clear that my mandate is to be in quality and to be in leaders.
No, for example,
what about other sectors, the leaders of 2017, metals, select autos, is that dream run over?
No, I don't think so. Metals also, I feel, will continue. I feel that if you see the global metal charts, they are very bullish. The problem with metals, Aisha, has always been the volatility. The problem with metals is, you wake up and there's a massive move that's happened globally and 3-4% down, 3-4% up. So essentially, when you play metals, you have to have a very different temperament. You either have it very big and you're ready to ride a very big bull market, or you're very quick to get in and out based on global prices. So I feel metals are still in a part of a global bull market. I think autos also. Not all autos are, bad. Look at some of the auto ancillaries, they are doing very well. So as I said, that irrespective of theme, wherever there is going to be performance and quality, those will get rewarded. And whichever is just poor quality and just went up because of some tweet or some WhatsApp group, I think that is going to be punished. And you're not going to see those rates, and rightly so, for some period of time.
Okay, since you're talking about quality names, let's talk about HDFC Bank and HUL. Again, I'm not trying to...
Yeah, I can't talk stocks.
I know, but
So disclaimer.
I know, but because these stocks have seen such a strong run.
Sure.
Do you get a sense that they are representative of the kind of momentum there is in both the segments of consumption and financials? Because, it's such a broad theme. If you just say consumption, then autos also fall into the ambit. Consumer durables also fall into the ambit. But do you think, the leaders in HUL and HDFC Bank, their chart patterns reflect what's happening in the space otherwise?
Truly so. There are always certain marquee names in every sector, and they give it leadership. Like, many years ago, Infosys was one such player. I remember in the whole IT boom, it was Infi that always made the fresh breakout and other stocks followed.
Now it's TCS, it seems like.
So you can make your pick. But exactly the names you mentioned are actually leaders. So instead of looking at the sector per se, you can very often look at that. Because, unfortunately, in India, we don't have very many sector indices and they're not very well constructed. So the fact is that when you look at these marquee names and when they make new highs, you will find that very often the sector follows through. And that's a fair way of making your assessment.
Atul, you said you're not worried about crude moving higher. You are waiting and watching how dollar index moves over 94 and 95. Let's talk about bond yields, international bond yields, and I'm not talking about US bond yield. Now there are a lot of historically, in fact, in recent past we have seen that the crisis have been first seen in the bond market and then it comes to equity. So if you look at some of the yields like Italian bond yields, which moved about 3%, showed correction, and now today they are again above those 3%. Do you think that these are some kind of lead indicators? Are you worried about spike in some of these sovereign bond yields?
So there will be volatility, Siddharth. See, it's never going to be a dream run. The world is never going to be perfect. There will always be concerns. And because there are concerns, we have markets. Because for every buyer, there's a seller. If there are no concerns, there would be no sellers and there would be no market. So these issues are going to remain, and there is going to be volatility. There are going to be ups and downs. But you have to just clear off all this web and realize ultimately what is your strategy and what is the trend you are playing. So as you rightly said, if again crude spikes, which I think it will at some point in time, it will create volatility, it will create corrections. Bond yields, I think, are going much higher in the US from where they are. It will create problems. But the issue is that, you push, that is going to create its things. But how do I strategize? How do I move ahead? Where are the leadership coming? And irrespective of that, the country will go on, economy will go on, companies will go on, markets will go on. For me, I have to navigate. See, I cannot control the environment. can only control myself and my reaction to the environment. So in all this imperfection, I have to look for my own perfection, and that's what I do as a fund manager.
Philosophical.
Oh, sorry. I get a bit carried away at times.
Monday motivation.
I can get a bit carried away. I'm sorry about that.
But no, I was just wondering, you know, since you touched upon global markets and Siddharth did question you about global yields, what's going on with the US equities? Would that hold through, or does it seem like there is any brittle? Because any report that you pick up, they're all waiting for the FANG stocks to decline.
Absolutely.
And they think that's going to be that big calamity that's going to lead to the next leg of recession, repeat of 2008. Is there any scope, possibility of that happening?
3 months ago, that was the talk.
Yeah.
And FANGs, you know, slightly corrected, and everyone was so happy that at the end,
finally
FANG is tanked. Now you go and look at the chart of FANGs. I just saw it last week, and they're all making new highs.
Exactly.
I mean, US, what are the concerns? Russell's, which is a mid-cap, broad-based.
Index,
the market breadth is amazing, lifetime highs.
Yeah.
What about NASDAQ? The Dow Transportation is also breaking out along with the Dow Industrials. So at the end of the day, you know, I mean, as I said, thanks to social media, there has to be a lot of talking points. And how else will you get noticed if you say good things? You know, you have to say something bad, controversial and things. I mean, sorry to say, I know I'm on a TV channel, but if you keep giving good news on a TV channel, who will watch it? Every breaking news has to be bad. So ultimately, they're all playing with your mind, you know. Yeah, I mean, they're playing with your mind.
So no concern when it comes to US equities, right?
Concerns will always be there, Aisha. The issue
but will price support it?
The issue
I
is,
think are the charts trending to
the
extent that, you know, we can continue making new highs for the US market?
I think so.
For how long, you think?
I don't know.
Because, you know, no, I mean, you would have read how Ray Dalio is calling 2019 to be a dangerous year for the markets.
Yeah, I mean,
you know, we've seen about 10 years, 10, 11 years of this bull market. So, you know, when you look at the long-term charts and you zoom out, you may get a sense on the trend.
No, I mean, very, very great voices and all respect to them. But honestly, things are so dynamic and so fluid. It's so difficult to pinpoint a year, a level and things like that.
But so, are you bullish still on the US market?
Yes, I am.
Yeah?
Simple. I'm bullish on India, I'm bullish on US.
What's that one red flag for you?
See, I think that the chart that is bad today, as of today, right now, I can only say that today, is the emerging market index. If you,
really?
If you look at the MSCI emerging market index, is a pretty bad looking chart, and it has in fact made a breakdown. This is at a 3-month low.
Really?
Yeah.
Okay.
The reason is that you find that a lot of emerging markets going through a lot of political turmoil. You look at Brazil, look at Argentina, look at Russia. Turkey is having its problem. So this is casting a very big spell on the EM basket. So because of that, this whole FII negative flows, I mean, I don't think it's totally correlated, but the fact is that we are not going to expect any big good news, especially on the FII numbers, which is a very important component of our market. So for me, the immediate concern is really what is happening in a lot of emerging market debt and emerging market equities. And that may have a knockdown effect on our currency and in terms of bond yields.
Are you bearish on the rupee?
I don't think I'm very, very bearish on the rupee. I feel that at the moment we are going to have a bit of a relief rally. And but yes, I feel things will head higher as far as currency and bond yields go. But more importantly is the market is going to be prepared. And that is why the negative impact that you see on equities will be lesser than what people expect it to be.
You know, Atul, anyone that we speak to, and they say that from now up until to the next year, and I will give you the exact timeline till 2019 elections, they say be prepared for it. Even though the market may go higher, we may make a fresh top, but volatility is going to be that one trend which is going to remain.
That is true.
Is that true?
See, what happened was we had such a smooth 2-year kind of market. You know, we had a slumber bull run. The fact is that it has to follow with volatility. So, you know, as I say, winter's here, spring is not far behind. Sorry, again, getting philosophy. And if spring is here, winter is not far behind. So, if you had a very, very low volatile market, you will have volatility. You will have to go through it. We are already seeing it. You'll have to navigate things and, you know, sort of strategize.
But this kind of stomach churning volatility, such heightened levels?
I mean, that's a price you'll have to pay. If life was so simple, then I think the whole world would be in equities, getting 15–20%.
Even Pharma is in now because, you know, last couple of days we have been talking relentlessly on Pharma. There has been strong bounce back. Negativity has been very high since last 1 year or so. Stocks, large cap stocks have corrected almost 60% from the top.
That's right.
How are the long-term charts in pharmaceutical space looking?
So Pharma was such an awesome, bull market that we had, and it was really, really gut crunching to, exit pharma positions, and fortunately they've even halved from there, like fortunately for the exits that they've even halved from where you exited. But the fact is that I feel that pharma is not going to just make a sectorial bottom, because I feel the issues in pharma are company specific. So we had some positive news on Sun Pharma, and you found a kind of move that is there, and it's having a knockdown effect. There's a bit of short positions also in pharma. So early you will see a short covering. But I feel that ultimately at an index level, in the pharma index, you will you'll have to start seeing higher highs and higher bottoms. Because right now the sector is just going one step lower, one step lower, one step lower. It has to start making a step higher, and one may be late, but I think it is right to wait, because one is that you don't know how long this will go on, and at that stage you'll also be able to identify stocks. So I don't think that across the board pharma is a buy. You will have to be company specific. First get a confirmation that there's a sectorial turnaround, and then be company specific. Just don't go and buy anything in pharma, because the issues in pharma are company specific, and if some may be able to come out of it, some may not. And if you buy the basket, and those that do not come out are going to pull down where
stocks is very high, irrespective of how company specific an issue might be.
But that is sentiment. That is sentiment. That is, as I said, short covering. Right now you will see it. Even if there's one good, and Sun Pharma again, as we mentioned, is like that marquee name. Yeah. Is like a sector leader where people sort of build it across the sector. And as I said, you will see short covering. The important thing is to see beyond that. Whether there is buying, whether there is accumulation, whether good news is there. If bad news comes, how stocks are behaving, and that's when you will get a big sectorial turnaround. The pain of holding very often can be very, very long, like PSU banks.
Sometimes not also. DMart reaches the market cap of 1 lakh crores. That's been quick and swift.
Well, that's not really a trading stock.
That's a trending stock. My kind of category.
Okay, before we thank you, where's the next dive?
It's going to be sometime around August, September, I think. A little bit. You need to work a bit. Can't be scuba diving so often.
Okay, good chatting with you, Atul, as always. Thanks so much. Okay, that's the word coming in from Atul Suri, saying that market will continue to chase quality. Yes, it's not going to be the dream run that 2017 was, wherein just about everything moves up. Be selective in the market. Stick to quality. Consumption, IT is what he likes and where he believes value is going to be. But again, very, very selectively, says that look at the prices. The screen is giving you the hints already. Chase the performance, and that's going to continue to do well.